Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Thursday, August 23rd, 2012. Well, a continuation of the trend to the upside today, and a candle that's made a higher high and a higher low, and another white body candle. For the previous 3 trading days we've had 3 white body candles. 3 trading periods ago the market traded through the 124.55 area in a very bullish manner. The next day's trading we saw a continuation of the trend to the upside with a fairly large white body candle, but the size of the white body had reduced drastically compared to the previous. And again today another white body candle, but a reduction in the size of the body. That does suggest that there is potential for a change of trend, and it's not the way that we want to see a trend develop. It means that as each day progresses to the upside, the buyers are making less and less commitment to taking this trend higher. They're losing momentum, and it does set this market up for a potential change of trend. Now we've also seen some selling from this 125.86 level, and we can see the shadow on the top of this candle representing the buyers losing some commitment. So here we now have an important junction of the resistance offered by the cloud, the top of the cloud, and the 125.86 area, and there is very strong potential for a change of trend. But having said that, the sellers still haven't taken control of this market. They have maintained control, but the control that they have is not as strong as previously because they've closed a distance away from the high, and that does suggest that there is some potential for a change of trend. Just looking at the trend line here as well, we've had this trend line tested now on 2 occasions after the beginning of it, and it is now a valid trend line and a very strong trend line, and we do have a target here at the around the trend channel just above this area of the 125.86 level. It's now up around the 126 area, but I doubt very much that the market will test up to those levels. We could see the market trade up there and then come off, but it certainly doesn't seem like that. But if we do see a bullish breakout up above this area, then that will be a bullish signal in terms of Ichimoku with a breakout up above the cloud. Now in terms of the Fibonacci extension, and we're examining the relationship of the current first time frame uptrend to the prior time the market was trending up, and 2 trading periods ago we saw the market test to the 161.8% level. There was too much bullishness in this market for that level to hold, and we've seen continued bullishness throughout the 2 previous days, although with the buyers losing some momentum. But the next target that we have is this 261.8% level at 126.30, testing just above the top of the cloud, coinciding roughly with that area just mentioned. But the Fibonacci Retracement tells a slightly different story, and we're now examining the relationship of the current first time frame uptrend to the prior first time frame downtrend, and we're now in an expansion mode of that. We've traded through the 100% level and the 161.8% level in a very bullish manner, and we are now testing to the 261.8% level, and we've seen the market trade almost exactly to that point, and some price rejection with the sellers maintaining control but losing some of the strength of that control that they had. And the confluence of the previous resistance and the cloud combined with this Fibonacci level does suggest that there is potential for a change of trend to the downside. In terms of Ichimoku, the market remains neutral in the long-term time frame by trading within the cloud, and we've been trading within the cloud for the past 3 days. There is potential for that change of trend in the long-term time frame with a breakout up above the cloud over the next few days, but very strong resistance overhead. We do need to be aware of that. What I'd like to see for a strong signal is a bullish breakout above there, but with the confluence of the all of this resistance around this area, it certainly doesn't seem likely. In terms of the other indicators, we are trading above the Kijun-sen and the Tenkan-sen, so we have a bullish market in the medium term and fast term timeframes. And quite some time ago we had the crossover of the Tenkan-sen above the Kijun-sen, but it was a weak signal because it occurred below the cloud. But overall, a bullish market in the minor timeframes. We've seen a very strong rally over the past few days. The market now finding some potentially strong resistance above, so the 125.86 area and just above is crucial to this market moving forward.